Welcome to Mining Over Canada. Join the Canadian Securities Exchange and our partners in a first-hand look into our country's vast mining landscape.
Hi, my name's Serin. I'm Director of Listings Development with the Canadian Securities Exchange. I'm joined here today with Gwen Preston from Resource Maven. Thank you so much for joining us, Gwen.
Thank you for having me.
So we are here today in this discussion during our Mining Over Canada initiative. And this week we're highlighting the Canadian Shield. So we'll be talking a bit about that. But before we dive into that, I want to talk to you a little bit about what a letter writer is and what Resource Maven is. So why don't you start by telling us about yourself and about Resource Maven?
Thank you for the opportunity. It's a really great question because there's a huge number of sources of information if you are interested in investing in miners or in explorers. And so understanding who's saying what and why is a really important part of the investing process. So my business, I call myself an independent newsletter writer. So I write about what I'm doing with my own money. So I write about what I'm buying, what stocks I'm buying and selling, and why I'm doing it, and then the context that I'm doing that in. So what I'm thinking about gold and silver and interest rates and all of the macroeconomic environment that creates reason to invest in those gold and silver stocks. The way that I run my business model, if someone calls themselves sort of an independent newsletter writer, is that we get our money from subscribers. So people pay to read what I write, and so that's where I get my money. And so I'm objective. I never take money from companies. I just write about opportunities that I see and that I'm buying and why I'm doing it, and so people can come along for that ride if they're interested. And the reason that I do that, there's two reasons. First of all, I love what I do. I love this space. I'm a journalist by background, so I love researching. I've spent almost 15 years in this space, so I love the people and the rocks and the opportunities. So, and I'm reasonably good at communicating. So it all comes together and makes it such that I can gather the information, find the right people, find the right projects, and communicate that information in a manner that's easy for people to take in. That's one reason why I do it. The other reason is just there's a lot of interest in investing in this space, as there should be, because when gold and silver markets or copper markets or whatever it might be, uranium markets get going, there's a huge amount of opportunity to profit, but it takes a lot of knowledge. And the most investors don't have the time to spend all day reading news releases or analyzing the geology of a particular part of Saskatchewan or whatever it might be. And so I do that work, and we don't all need to do the same work. So I do the work, I share all the work that I've done, I summarize it and send it out. And then people who are interested in the space and like to invest, but have day jobs and families and activities that they're doing, can take advantage of that heavy lifting that I've done. And so that's why I do it. That's my motivation. That's my business model. There's quite a few people who do the same thing that I do, who are subscriber supported newsletter writers. And they are the ones who I think interested investors should look to for information. There's a whole host of other letters out there or things that look like newsletters, but you have to read the disclaimer, because if they're taking money from the company to write the thing that's in the letter, then that just means they're not objective. They're being paid to say what they're saying. So that's a different thing. So I would say if you're not sure, then read the disclaimer that's attached to the thing that you're reading, and the disclaimer has to tell you whether they're taking money from the company. And if they are, just keep that in mind as you're reading it. And if they aren't, then they're doing the business model that I'm doing, which is to provide information to investors who are interested in doing the kind of investing that I'm doing.
That's a really good takeaway. And actually, I didn't even know that myself. I mean, I understood that there's independent versus, paid for analysts. But that's interesting that it's in the disclaimer. And I think, some of the stuff that is paid for the company, it doesn't necessarily mean it's untrue. It just means it's not independent. It is something that has been a promotional paid for by the company to make sure that they're getting their story out, which is great as well.
Yes.
Do you think that your role has become even more important as we've seen a shift of retail market go to the discount brokerage houses?
So yeah, that's a really important shift. It absolutely has happened. In the last bull market, the majority of investors were still going through investment banks, and they had brokers, and that meant that they had access to deal flow. Really what I mean is their broker was on their side. Their broker was sort of playing the role that I play, which is that they were looking for good deals and they were sending them research. There's analysts who work at banks and who can create the kind of research that I do about the macroeconomic picture and about individual stocks. And so investors had that source of information and that source of deal flow. Like you say, now a lot of investors are with discount brokerages, which is great in terms of the trading costs for sure, but they don't get that deal flow. And so, yeah, I think it is. And it's a shift that has pros and cons for sure. Obviously, it's hard for brokers. It's hard for investment banks in terms of making money, but it gives me an opportunity. And there also is, investment banks have other motivations at play all the time in terms of which companies they're working with and things like that. So the shift is what it is. It did not happen because of the way people get their information, but it has changed how people get their information. And yes, there's been a fair bit of conversation in the last little while that letter writers like myself are stepping into a gap that sort of has resulted.
Well, and I think one thing is I've gone through this initiative, but had a fairly good understanding before. I was a broker for 10 years. And I think the one thing I noticed mostly about retail investors and specifically new retail investors is they don't even have a due diligence process. They don't even have a basic, I will look at this and this and this when I'm looking at a company, even if it's at the most basic level. And one thing we've had in dialogues leading up to the Canadian Shield Week, where you and I are having this discussion, is, there is a national instrument 43101 that has to be done on every property that is in a public vehicle, and that's available. You can access that geological report that tells you what they think is there, what should be happening, what the drill program should be, and a little bit of information about potential valuation. There's also prospectuses that are filed with the commission where you can take a look at how the company is managing their business plan. So there's a bunch of information that is available out there. And I think the letter writers and analysts are definitely, that needs to be implemented in some way, shape, or form in your due diligence process, as well as the fact that none of us are really technically focused people. We need to turn to people like you who actually understands what those press releases mean. I mean, I've heard companies say a press release nowadays doesn't mean as much as it used to. And I think it's because people don't even necessarily understand what's in the press release, right? So what would your advice be to somebody wanting to come and invest in the space, other than that they should be looking at people such as yourself providing the information?
So I think an answer to that I've been giving a lot lately is you got to figure out what you are trying to accomplish. So there's a real opportunity, in my view, for the next few years, investing in gold and silver for sure, and then potentially also copper and likely uranium, and then several other metals as well. Like, I really think we're set up for a pretty exciting few years for investors in the mining and metals space. You as an investor have to figure out how you want to play that game. How much risk do you want to take on? How much time do you want to spend? And once you answer those questions, then you can play the game that makes sense for you. So if you don't want to take on a lot of risk and you don't want to spend a lot of time with your portfolio, you can absolutely build a low risk, low engagement portfolio that will perform pretty darn well, like 50% annual returns, quite likely. That's what the GDX gave us in the last 52 weeks. That's just big gold miners. You can build that, and then you don't have to worry about, the rock description in the Junior Explorers news release. If you want to take on a lot of risk and spend a lot of time with your portfolio, then you absolutely you can play the game where there's potential for much higher returns, but you have to be really engaged and you have to be trading. You have to be paying attention to the huge number of forces that influence a junior company's share price, from the description of rocks in that news release to the way they're financing, the timing of the free trade dates, the seasonality of their project, the area play. There's so many factors that influence the way that a junior company trades. And so my real answer is decide what game you want to play, and then don't have fear of missing out. Like, if you're playing the low risk, low engagement game, don't look at that junior explorer whose share price spiked 300% and say, oh, I should have been in that, because you couldn't. That's not the game you're playing. But that's okay. You're still going to do really well in your portfolio, and it's going to be more satisfying and less stressful because it's the right game for you. So that's the starting point. And then once you choose which path you want to be on, then there's a bunch of other questions to answer along the way. But I think that's the first important question.
I love that advice. I think you said it better than I've ever heard anyone say it. And it very much is recognize who you are as an investor, recognize how much you want to invest in this part of the market and how much that's going to be allocated in your portfolio, and then go from there. And I think once you find that place of comfort for yourself, play that long-term role for yourself and take care of yourself as an investor. And I think you're right. There's definitely, if you choose one path versus the other, it very much depicts where you get your information and how you make your investment decisions. So be aware of what you're wanting to do and make those decisions. That's wonderful advice. Thank you, Gwen. Tell us a little bit about your job. So I know that I know from our pre-chat that you work a lot from home, but do you get to go on site? What does your job look like?
Fun question. So yes, I certainly work from home. This is my office, which is literally at the top of my stairs. My daughter's room is right over there. My room's right over there. There's, family photos on the wall behind me. So yes, I work from home. In a non-COVID world, I usually go downtown 2 days a week. I live in North Vancouver, so I go into downtown Vancouver 2 days a week for meetings. So to catch up with companies, explorers, to do meetings basically. In a COVID world, I just sit right here and do it on Zoom. And in a normal non-COVID world, I absolutely do site visits. And so I'm not a geologist, I'm a chemist and a journalist. So I have a technical background and I've written about rocks for 15 years, so I can understand a reasonable amount of geology. But I don't really go on a site visit to use a magnifying glass and look at a rock, because I don't get much from that. I go on site visits for all the other reasons, to spend a significant chunk of time with management and get a real feel for who they are and how they operate. If it's a jurisdiction that I don't know, then it's really important to go there and get an understanding of whether it works. I went to Mongolia to see how Mongolia works. I went to Albania. That one doesn't work so well. Right? I've been to a whole host of places. Various parts of Mexico are functional and aren't functional in terms of exploration and the security needs and the social pressures or acceptances. So going down there can really help. If it's a difficult topography or access, if you're in the middle of nowhere, you can go on a site visit and really get a feel for what the hurdle is for success here. If it's easy to access, there's community support, there's a power line available, the government is functional, then the discovery doesn't have to be out of this world for it to work. But if those things are all challenging, then it does have to be a next level discovery. So I go on a site visit to understand the context in which the geology is happening. And yeah, I do, before COVID hit, once a month on the road to go and see a project and spend time with people. And then the other bonus is that you go on these trips with a bunch of other investors and analysts, and you just have a lot of conversations about other projects, geology, forces that are at work in the mining space. So there's always a lot of really interesting conversations that happen on those trips as well, which is definitely a side benefit for those trips.
Well, that sounds amazing. And it definitely, I think, puts forward the point that paying attention to people like you who get the opportunity to go on site and see what's going on. I was speaking with someone the other day and they said, go onto Google Maps. When somebody tells you about their property, you can just go onto Google Maps and see, there's a lot you can learn just from that, right?
Yeah.
Which can tell you a lot, but definitely listening to the professionals. You touched on something that does make me a little sad, and that is the conversation that you have with everyone. I really am, and this was part of Mining Over Canada this year, this virtual experience that we're having and talking to all of you guys. I'm really going to miss some of the major conferences that we all have a chance to go to and be together in a room, and it's such a great time for us all to find out what happened in the jurisdiction you were looking at, in the past year, and how was it raising capital for this? And what do you think this commodity is doing? I mean, I think for a lot of us, we depended on those opportunities to all be together and share our experiences and learn whatever we could, and take that into the next year for us. So I'm definitely going to miss that this year. And I hope that, we continue to find ways to do this type of virtual content and keep that information flowing. Hopefully, ideally, we're making it more widespread. You don't have to be in Toronto during PDAC, hopefully, to be able to hear from Gwen Preston, right? So, I think that's one thing that'll definitely shift. What do you think it'll look like? I mean, obviously, we're seeing a bit of a mining market right now. What does that mean?
Yeah, it's a really, really interesting time and question, thought process, all of those things. I mean, there's a proliferation of online conferences right now. I feel like I'm part of an online conference every other day, which has its pros and cons. I mean, different audiences, like you say, you can live anywhere and participate in these conferences, which is great accessibility for investors. You don't have to travel or be living in a major center, so that part's great. There's some platforms that work better than others. And so, we're feeling our way through it. But you're totally right that being in person and just running into people and having conversations and, oh my gosh, have you heard about this project? Oh, is that with the guy who did oh, I remember that. Those conversations are really important. Like, I leave every conference with a new list of stocks or people that I need to investigate because of what I've been hearing and learning. So how's it going to look? I mean, we were already very much over the last few decades in a shift to getting our information online. And so online forums and whatnot were already more important, and they've only become more so. And I really think there's pros and cons to that because, anybody can hide behind a keyboard. There's a lot of good people sitting at keyboards who are honestly looking for information and contributing ideas. And then there's people who aren't, sitting in the same seat, so to speak. And so again, it's kind of like choosing your newsletter writer. You just have to be always a little bit cautious, never take anything just as it is. But yes, those online conversations are really important. There's a lot of really good information out there. If you can just always be aware of the need to use a filter. And then we'll just hope that at some point we can all get together again in person.
Absolutely. Now, listen, we're going to talk about Saskatchewan, but I want to talk about Canada. So we're seeing a bit of a mining market right now in Canada. Well, we're seeing it globally, obviously, but in Canada, we're seeing this surge. And I think we're kind of a wonderful little playground for the capital market space to help fund a lot of the projects that are going forward. What do you think about the mining space right now in general? Any overall thoughts?
Yeah, I mean, I think it isn't in an unusual spot, which is a bit of a statement given that the world is in a very unusual spot. But mining markets sort of develop in this 2 steps forward, 1 step back progression. Always, there's almost always an initial run and then a step back where a bunch of those initial gains are lost. And then there's phase 2, which is where things get really exciting. That's exactly what we've been going through. It's taken a little longer because, the initial run was in 2016 and now it's taken till 2020 and a global pandemic to really kick things off into the second phase. But at the end of the day, it all looks pretty darn similar to how it usually plays out. And there's this regular playbook where the hardcore investors who are always tracking the space have been positioning, for a long time, and they're increasingly excited. And that's the number of financings has really ramped up and they're getting more and more popular. Like investors are being turned away from financings. So that core group of investors is very active and is increasingly confident about what the markets are going to hold for us in the future. And then, over the last 2 years, but then in particular since, call it May, we've been getting more and more of these famous generalist investors or fund managers, things like that, talking about gold. And that happens every time. And it's those people pointing to gold as the safe haven, the thing that works when bonds aren't yielding, the thing that works whether we end up with inflation or deflation. They point to gold, and we are in a really odd monetary and like stock market valuation situation. But at the end of the day, the gold argument makes a huge amount of sense from a fundamentals perspective. If you need to hedge all of this safe money that usually played bonds for decades, can't play bonds because bonds don't give them anything anymore. And so they've been playing the stock market since the great financial crisis. That's fine. It's been paying them nicely, but they have to hedge that. They have to hedge the stock market because there's risk there for sure. And so how do you hedge the stock market risk? Well, you can't do it with bonds. That's where this conversation started. So you have to find something else to hedge it with. And more the conversation keeps pointing to gold for that, especially because we're in a negative real rate environment because of the pandemic. So it is all set up well, and the steps are happening. So these famous people are talking about gold. And so you're starting to see increasing allocations in portfolios, in generalist portfolios towards gold. The one thing that is different this time is how easily ETFs are available. And so even in the last gold market, go back to 2006, there wasn't wide availability of exposure to gold, physical gold through ETFs. Now, if you're interested in gold, you can buy a gold ETF in a second. And we've seen incredible inflows into gold ETFs. And that is a bit of a shift because some of that money, a good part of that money likely would have gone into miners if those ETFs weren't available. So that's a change, but markets evolve, and that's the nature of humans. And so it will still work. And so as much as we're in a really strange place, this market is evolving just the way that it always does. And I'm pretty confident that we're in a good position looking forward.
You brought up something, and I think this word is thrown out around a lot, and I don't know if people know what that means, but an ETF is an exchange traded fund. And you bring up a really good point. And when you're looking at wanting to have a part of your portfolio in the mining sector, if you wanted a little bit of that stability and a little bit of the speculation, ETFs are a great, one-stop shop for that. And I also am a big fan of ETFs when they finally came to market, because I do believe that some of our managed funds are perhaps overpriced as far as their management fees. And I think people sometimes get trapped into something that maybe they aren't aware that they got trapped into with back end and front end funds. So maybe you can just touch a little bit on what an ETF is so people know, because I think it's valuable for all people to have some exposure to ETFs in their portfolio.
For sure. So it's partly about the game that you want to play, but yeah, an exchange traded fund. The easiest way to describe it is it gives you exposure to, if there's a thing you want exposure to, it gives you exposure to that thing without having to make a bunch of specific decisions. So if you like gold, you don't have to decide like, oh, am I going to buy physical gold? Where am I going to store it? What am I going to do with this stuff? You can buy paper gold, which is a share in a fund that owns gold. And so that's a physical backed ETF. So you can buy, that's just straight exposure to physical gold. But then there's also a lot of ways to buy baskets of stocks. So if you want that exposure to gold, but you want a little bit more than just exposure to the price of gold, you want some leverage to it, well, then you can buy GDX or the Sprott Gold Miners Index, something like that, which is a basket of mining stocks. So stocks give you leverage, they give you extra upside when the price is rising because their costs are fairly set. So as the price of gold rises, their profit margin rises dramatically. And so that's the extra leverage that you get with miners versus just the commodity. And so if you want exposure to that bonus upside and you're a gold optimist, then you can buy a basket of gold miners instead of having to decide, well, should I buy Kinross or Barrick or Agnico, or which one should I buy, and like stressing about that. You can let the analysts. So some of them are just based on market cap. So GDX is just based on market cap. And then some of them, like the Sprott funds, are more selectively chosen based on outlooks. And there's a bit of a range in there, but you can absolutely buy, just exposure to a basket of miners. And so, this is all about, they're really great options, like you say, because you don't always want to have to make a bunch of decisions. And by having a basket, if one of them goes haywire, well, that was only one of 20 or whatever. And so you're limited risk. So yes, they're really great options for those who are newer to the space, but wanting exposure.
It also is an opportunity to participate where, sometimes a few board lots of those stocks, if you wanted to own 10 of them, we don't necessarily all have that kind of investable cash. So it allows you to participate in a bunch of different stocks. Thank you. You did a great job explaining that. And I think some people don't really know what ETFs are, but they're a really great option, especially in the mining space. Okay, listen, let's talk about why we're here today. I feel like you and I could talk forever. Yeah. Let's talk about Saskatchewan. You've done a bunch of research and literature on Saskatchewan and some of the commodities there. So go for it. Tell us all about it.
So, Saskatchewan is first and foremost a uranium province, right? So the uranium mining is very important to the province of Saskatchewan, and that's not going anywhere. So, some of the biggest, highest grade deposits in the world are absolutely in Saskatchewan. And that means that some of the most important uranium mines in the world are in Saskatchewan. So Cigar Lake, huge mine in Saskatchewan. When they suspended that mine during COVID, that had a dramatic impact on the price of uranium, because guess what? It's like 20% of the world's uranium comes from that one mine. So yeah, this is the Athabasca Basin. This is the big formation. It was a big sea. It's now filled with sediments. Where the base of the old sea hits the old bottom rock, that's called the unconformity. And there's a bunch of uranium that sits in various structures and orientations along that unconformity. And so there's been lots of exploration there. I would say in the last 10 years, there's been a few really important advancements in how they look for uranium in Saskatchewan and in and around the Athabasca that's opened up a whole bunch of new opportunities for finding things. We used to only look at the unconformity, but now we're looking, beside it and under it, related to structure and various other factors. And so that's led to some important things like, so Next Gen Energy has a project there has a deposit there called the Arrow deposit, which will probably become one of the most important uranium mines in the world because it's this huge uranium deposit and it's super high grade and it's in really good rocks that are going to be easy to mine. A lot of the Athabasca is very difficult to mine because it's in sandstone, which like falls apart, but this is in granite, so it's really hard. So uranium exploration in the Athabasca is absolutely still viable. That said, that's coming from a uranium market that's been struggling for 10 years. There was the Fukushima disaster, and there was an oversupply issue already at play when that happened. And so that market has struggled for 10 years. Now, I'm a uranium bull. I think sometime in the next year, 18 months, we're going to start seeing uranium really take off. It would take me another half hour to sort of go through all of the reasons for that, but I'm very optimistic on uranium, and uranium exploration in Saskatchewan is alive and well for sure. What another interesting thing for Saskatchewan, though, is that the gold side of things has been picking up again in the last decade. About a decade ago, they made the Santoy discovery, which was right by the CB mine, which was a good mine, but it was a lower grade thing and it was running out of ore and it had always been a small mine. And then Claude Resources made the Santoy discovery, which was this high grade underground, like 10 gram per ton underground thing. SSR Mining ended up taking out Claude. They expanded that mine. That thing's kicking out lots of money for SSR. And it's kicked off a renewed surge of interest in that area. And so it's called the Tabernor Fault or the Trans-Hudson Formation. And it's this big swath that goes, from the northeast part of Saskatchewan all the way down through the Dakotas. And there's a lot of junior companies that are doing exploration work there now. That said, it's still early days for this whole swath of ground. If you compare sort of the amount of gold exploration work that's been done there versus some of the famous trends in Ontario or Quebec, it's like nothing. Like they've barely scratched the surface, so to speak, like really, truly. So there's pros and cons to that. Pro is obviously that there's lots of opportunity there. There's lots of rocks that have not yet been turned. And so there could be lots of things yet to be discovered. The downside is that there isn't a really clear structure for how to figure out gold in the Trans-Hudson yet. So it's still early days in figuring out how to find gold there. But there's a bunch of companies that are busy there and making discoveries. So, and both the uranium and gold is happening in a province that is very supportive of mining and exploration. You still need to make sure that the communities are on side and that the First Nations are in support and all of those things that you always need. But if those things are good, then the permitting makes sense, the ownership is clear, the province is supportive. So yeah, it's a good place to work, and I think it's getting more attention. It's not like, Newfoundland these days where everybody's tripping over themselves to pick up a piece of ground, but it's got its own strengths for sure.
That's so interesting. I didn't know any of that. I mean, I bet there's just more and more of that information going on. And I know the surrounding areas, there's some other things coming out of that area. I won't push you on that because I know this is where you've kind of focused some of your energy recently. I can't thank you enough for all this. I would love to do this again with you if you're open to it. And I believe that I've booked off your schedule to join us for the live event on November 24th, where I'm going to be putting you alongside some of the other experts, and we'll be carrying on this discussion. But Gwen, you're lovely to listen to. You obviously know what you're talking about. I really do encourage people to check out Resource Maven and follow you, because it is quite interesting, some of the stuff that people can find that are experts that we just as normal people out here in the world don't necessarily understand. So definitely encourage people to go check out her website and some of the stuff that she does. It's quite interesting stuff. Thank you again, Gwen. I really appreciate it.
Thank you so much for all your kind words and for having me participate today.
We'll see you on the 24th.